Hey, this is Sasha, and welcome to another episode here on Hungry for Returns, where I answer your trading and investing questions based on my own past successes, failures, and just common knowledge that I've acquired over the years. So if you have a trading and investing questions about options or just stock market overall, feel free to submit a question at tradersfly.com. Anyways, let's take a listen to this week's question and then head on over to the screen about technical indicators, technical analysis, and fundamentals.
Hi, my name is Jared. I have a question about price action versus indicators. I've been hearing a lot recently about how indicators are dead, and it worked well in the 90s. But it's today it's all done with price action and a lot of fundamental trading. I was just wondering your take on that because I've tried technical trading up to this point for about 9 months, and I've had some success, but overall, it's steadily going downhill, and just wanted your take. Thanks.
Okay, so let me give you my insight. Typically, first off, before we even get into the answer of the question, you have to remember that oftentimes when you're hunting and searching for an answer, you're saying you hear a lot of things, and that goes with anybody who's studying and learning things. You have to be very cautious at the things you're learning, especially when you're new and you're just kind of getting started. Because when you say, hey, I'm hearing these things, it means that you're actually searching for reconfirming your ideas and beliefs. So you might be hearing those things aren't working out in trading, and then you again try to find validation for those things. So wherever you're kind of hearing those things, take a step back and understand, okay, well, what is it that you're hearing that's new? What is it that's different? How does it apply overall to the bigger picture? And how do you take a step out of it to see it for itself, right? Without getting clouded by what's going on in your personal trading. So the thing is also, when it comes to fundamentals, has always, worked. You're always thinking, okay, well, fundamentals is the key, is what you're telling me based on my notes. Price actions versus indicators, and that, hey, indicators are dead. The reality is when you look at a chart, and let's just take, for example, NVIDIA, typically stocks with great fundamentals are going to have great price action or great indicators. Stocks with great technicals are going to usually have great fundamentals. So they work hand in hand. If you got a stock that's great chart, it's going to have great fundamentals. If you got a stock with great fundamentals, it's going to have great chart. If it's the other way around, if it's got bad fundamentals, probably it's going to have a bad chart. If it's got bad technicals, it's probably going to have bad fundamentals. In certain rare cases, this does not happen. Usually crooked companies, I'll call them out. I think Wells Fargo, a little more crooked than other companies where they cook the books. In those cases, fundamentals and technicals won't go hand in hand. But oftentimes, technicals and fundamentals, they go hand in hand. The difference is that fundamental data is usually, they're looking way longer out in terms, right? You're investing way out longer in terms. So the question is if you're investing way out longer in terms, are you doing the same thing with your technicals? Are you looking at the technical charts on a monthly basis versus maybe like a weekly or daily basis? And are you, holding and doing the positions in those same concepts? So that's what most people don't do in the same approach, because with a big business, right? You're talking about multi-million to billion-dollar companies. With big businesses, it takes a long time for that ship to turn. So if they need to change their angle direction, it takes multiple years for them to change production lines and those kinds of things, marketing tactics. So you have to be understanding of these things. Fundamentals, that's how they work, is for the long term. Technicals, they can work in the short term. So if a stock is in a panic mode, fundamentals go out the door. People are selling in a panic. They're emotional. But typically they go hand in hand. So let's take a look here. You could pick any stock. Doesn't matter. Stocks that have great fundamental data, I bet you can look at NVIDIA here, probably had good fundamental data here. Back here, probably not as good. And the minute that breaks down, it all catches up, right? Price too high for where it is. So they always lag a little bit on one hand, but they typically average out with time to be similar to fundamentals and technicals. Now, when you look at price action versus indicators, if that's kind of the big question, You can pick any stock you want. It doesn't really matter. Price action, when you're looking at charts, you're looking at price. First, you got to define what is price action. Because for me, I look at a couple things when I do price action. So I'll share it from my perspective. When I look at price action, I'm looking at the price, because that's what price is. Price action is its own thing, which is how is it moving? Is it moving strong? Is it moving weak? How do you determine that? So this is part B. How do you determine that? Well, look at price action in the sense of how big is the bar? Is that bar big or is that bar small? Okay, and then you look at overall the behavior, right? The pattern. So price, action, and behavior. Now you look at like the chart patterns themselves. So all of that you can get indicators from mostly, right? And how do these indicators really come about? Well, let's take the moving average here, which I've had. If you look at this, and you look at this the way that it's designed, if I get rid of that, do you think I could kind of get an idea of how that line is probably drawn? Yeah, more than likely, because what am I doing? Well, I'm averaging these prices. Now, normally, if you're trying to do it manually, you got to kind of zoom back out, but you kind of get an idea. It's not going to be perfect because, I'm not mathematically calculating it, but you get kind of an idea of what it's drawn. Now, look at MACD, look at stochastics. What do they calculate? So if we look at stochastics here, how does the calculation kind of work out? What is it used? Okay, well, let's take a look. How do you calculate it? Stochastic, let's go into the finance sector. Stochastics calculation for stocks here real quick. And you can see what they use. Definition is the moving average bound by units. And here it is. So you got the most recent closing price, you got the lowest price traded, the highest price, the current value of the stochastics indicator. So you basically have, again, price action. Now, I think what people do wrong, including MACD, stochastics, RSI, all those things, is they put too much emphasis on the indicator themselves, and they don't really look at the overall chart itself. That's kind of one of the bigger problems that most people have, is they put so much emphasis in these indicators, but they're lagging, where in fact the price is more leading, right? Because it happens real time, whereas these other indicators, they're a little behind. And people put so much emphasis in it that they believe, hey, it's going to give me my signal, I know if it's strong or weak. But beyond that, they don't even have a trading plan. They don't even have a money management strategy. And all those things work together to create a successful trade. So if you work with fundamental analysis, if you're trying to compare that to technicals, usually hand in hand, stocks with great technicals are going to have great fundamentals. Stocks with great fundamentals are going to have great technicals. It's just sometimes they don't line up with companies like a Wells Fargo because they cook the books maybe, or other times when people are in a panic, they sell off. So they sell off because of emotional reasons. Otherwise, most of those other indicators, they can cloud your judgment if you don't use them correctly. So you can see for me here, I don't show my charts with RSI or the ADX or the PPO, which I probably look at maybe 3 times a month. But other than that, I don't give that much emphasis to these indicators, and I never have, because you can get it mentally if you're looking at the price itself. Yeah, you could say that's the price action, but those indicators, they're just drivers from the price action. And from the way that I define it is basically the way that the price, the action, and the behavior or the pattern, chart pattern, and that's how I would look at it. But I wouldn't say that they're completely dead, because all of a sudden now you're saying maybe the moving average is dead, because that's also considered an indicator in a simple way. Instead, I would look at it, hey, how do I use these things to help my trading, my concepts, my strategy, my plan? I don't like to eliminate myself personally from any one thing. So if I'm listening to someone give a speech or an audience, somebody's talking, educating, what I like to do is say, hey, what is it that I'm hearing that's new? What is it that's different? How can I use this to my benefit? Even though many of the information might be the same exact things I've already discussed, talked about, thought about, but you always want to go in with a little bit more open mind, so that way you can evolve yourself personally. So anyways, that's just kind of my thought and take on the overall indicators, fundamentals. Fundamentals were great. They're more for longer term. Technicals are more if you're trading less than, let's say, 90 days, even less than 1 year holding time. But otherwise, fundamentals, yeah, they'll usually pan out and work out. So if you look at stocks like a Walmart, yeah, of course, with time, they're going to continue to grow just over years because of dividends and just natural price inflation. That's just the nature of prices. They just keep going up. Whether you buy, a car 10 years ago or now, it's going to be more expensive just because prices keep going up. The value of the dollar keeps, decreasing in the sense, meaning you can only buy a hamburger now, it's going to cost you $1 or $2, and some hamburgers $20, $50, $500. But in the past, it might be just 10 cents, 20 cents, back in the 1920s. So that's just the nature of price movements. Anyways, other than that, look at it how you can benefit yourself personally from using this as a tool. It's just a tool. Technicals, fundamentals, they're all just tools. And just see how you can use it. Because some people, they can use wire and they can make, a piece of art. Other people use wire to wire their house. So you can use them differently in different ways depending on your needs. So keep an open mind and see how you can benefit from them. If you're not putting the puzzle pieces together, if it's not working for you to trade off at technicals, then go to fundamentals. It's perfectly okay. It's a different strategy for you. It doesn't line up, right? If you're dating someone and that relationship doesn't work, but then all of a sudden that person ends up marrying someone else, that's fine. That's great. It's great for them. It just wasn't a match or a fit for you. So same thing here. If technicals aren't working for you, it doesn't match for you, that's fine. Don't keep pushing it. Try something new. But of course, don't give up too early. You want to put the effort and energy behind it. But it's just a tool. Use it to just continue to get better and evolve. And if fundamentals work for you, stick to fundamentals. If technicals work for you, stick to technicals. Whatever the case is. But as I mentioned, typically, I wouldn't say technicals are dead. I wouldn't say indicators are dead. I would just say that, it might not be the right fit for you, your personality, your risk tolerance, your risk levels, the way that you trade, or the way that you make decisions. Anyways, hope this makes sense. Thank you so much for joining me. And if you have a question, feel free to reach out at tradersfly.com, submit a voice question, and that way you get a more detailed answer. Or, of course, you could just hang out and subscribe on YouTube. Thanks for joining me, and I'll see you next time.